This is why I want to focus primarily on sub 100 million market cap. I realize there's about, I looked the other day, and the amount of companies listed is coming down. I think that's a bad thing. It's not really, because the problem with anything like in life is you generalize too much and try and be a master of all trades. Jack of all trades, master of none, I mean. That's the issue, is option paralysis, you know? What you should do is become very knowledgeable of a certain subsector where you know is going to produce good results. And sub 100 million market cap does. So if you get to know these companies, and it doesn't matter if you miss the first one up, if you get to know them, and you think that's a good company, and so that's what you rank them pretty much. It's a great chance of success rather than jumping around everywhere. You look at a big cap, small cap, not knowing what the potential is. If you actually focus in on a subsection, and then you know exactly what potential is and what you need to do to get there, I think it'll be a lot better. But anyway, most of the companies on stocks will be sub 100 million market cap. Why? 60%. I've always said this 60%, and I look at this pretty much every year when I count with time. 60% of the best performers start with market cap below 100 million. I'm not talking about the pop and drops, which are high potential stock. I'm talking about sustainable rising companies. And that means good businesses that are generating revenue, increasing revenue and profits and all that stuff. They will be going on to be excellent businesses, those standout businesses, those ones that become super stocks. That's what I'm looking for, ideally. I want to have some of those that I can hold on to for years, pretty much, and make thousands of percent rather than just jumping in and out of pop and drop stocks. It's always good to have one or two pop and drop stocks because they go quickly, and then you can get a bit of money, and then they come back down. It's like OBD, for example, Destiny Pharma. There's loads of those. Here's 10 examples of companies started below 100 million that's become 10 baggers. That became 10 baggers, okay? GB Group, I didn't realize this. I was researching this for the book. 21 pence in 2009, 929, 1900% rise, started at 18 million market cap. Asos, I mean, it's come off a lot now, but it was a long time it's going up. It's plenty of time to take profits before it happened. 70 pence started at 70 million market cap, 10,000%. I'm not going to say you capture all that, but these are the kind of companies I want years of rising. And I think it'll happen. A lot of these companies are held down by bear markets, so you don't think it will happen. It will happen. It will happen. Once they start reducing interest rates, I believe that'll be the catalyst. The market will start to rally. You get some pop and drops, but you want sustainable companies. U Group, I missed this one. I don't know why. The top line growth was excellent. And if I'd done the spreadsheet thing properly when it first started there, I would have seen that. You would have seen the improvements in the margins on everything, on the growth, the value, the health. It's still good value now. But 2,500% started at just 8.4 million market cap. Tristel, share price rose 46 pence, so £6.60 in February 21, a 1,333% rise, started with 18.4 million again. Future started at 80 million market cap, nearly a 2,000% rise. Carillion Group, 1,001% rise, started 40 million market cap. React Group, in fact, they're still tiny, and I still quite like them. They've done 20% growth year on year. So look at this. During COVID, because they're a cleaning company, they did a 2,000 from 2019. They started life as sub a million market cap. But I think that's one to look at. I know I do quite like it. I mean, I like what they're doing. They obviously got a good run business, and it's on the watch list a little bit. Gaming Realms, another one. Yeah, a 750% rise. However, it did hit during COVID because gaming 1,000%. 12 million market cap that started off at. For Imprint, one of the all-time, still going up that. 1900% started at 60 million market cap. Argo Blockchain, of course, that's another one I literally got out of through boredom. 4,577%. Started at 17 million market cap in 2020. So stock scores is likely to feature some of these big winners, future winners. They'll feature, and you can see it by the growth because all these winners had growth. They all had growth. If you're a small company and you don't have growth, you may be the odd year that it doesn't have growth, but growth is essential. It's the number one metric. That's why I score growth highly. Like I say, growth on the stock scores, you get a 6 on every metric, which is the next highest scoring is value. Okay. Because growth is imperative. Everything stems from growth. Increased profits stem from growth. Yes, you can cut costs to get more profit, but you're not increase. You can't keep cutting costs every year unless you sack everyone. But then you have got a workforce. So, everything stems from growth. Small companies have to have growth. And I want to show you this because this is the presentation they did. Sorry, let's go back up. I spoiled it now, haven't I? You know what's coming. So what do they do? I had this company on the webinar, not the webinar, the podcast, about 2 years back, about a year back. And I like what Simon was saying, the pipeline and all that, but I thought, is it just rubbish? She's talking nonsense. And I looked back and they've done some placings, all that stuff. They did a recent placing, actually, 10 million. I think that's good in this market, 10 million. I mean, but maritime security, safety, sustainability, right? Investment kit, established growing business with exceptional growth upside, profitable, established business with robust first mover advantage in rapidly developing billion-pound global markets. So they're likening this to air traffic control, but where air traffic control has more regulation in place, and you have to have these sort of security, and tech involved, it really hasn't been. The marine side of it hasn't kept up with it all, but now they are. There's more things going on, with people doing illegal fishing or pirates or bombing, all that stuff, And it's now coast guards, national coast guards, are really upping their game to tackle all these problems. Scalable business model underpinned by established team and operational structure that includes global distribution network of 3,000. In fact, with the most recent update, I think they say close to 4,500, 5,000 now resellers. Range of market-leading products with innovative. And he said to me, Simon, actually, he said, we've been doing this now for over 10 years. You can't just start this business up. It's like, with the tech we have, the data we have, and now using that for AI as well is huge. Now, this is the thing, right? And there's obviously a little bit of a delay, but year-on-year revenue growth from 30 million to 71 million, and that's forecast up to 100 odd million next year. So 2024 will be 71 million. And this is underpinned by existing forward contracts of 160 million. Now, these contracts were expected to land in March, but they've shifted and you may think this is dodgy, and they do explain why it's happened. They shifted the end of year to June because they believe they're dealing with government contracts and they can take a long time. They've been signed and all that stuff, but there's delays, of course, because some of the countries they're operating in, I think it's Saudi and the Far East, the Philippines, all that stuff. Obviously Muslim countries. They said obviously delays to Eid and festivals, all that stuff, but governments take a while anyway, and so they don't want that to slip because they want it in this year's revenue. But they've got a contracted pipeline of 1.4 billion, but a mature pipeline at 380 million. And it seems like if you go back and look at the contracts they've signed, they are meant to be sort of generating revenue now, being delivered now in this year. And in fact, they said Q4 this year, which would be now, it should be Q1 because that's how the year runs. So financial highlights, 265% increase in revenue to 30 million. EBITDA 2.5, 20 million headroom increased by standby loan note program, 11.5 million cash payments from system customers contracts. So you can see here, these are the forecasts. And the systems revenue is the thing, is the data and all that stuff. Look at that, 81 million they reckon by 2025 on systems alone, 55 million from that, and all the other bits there, gross profit, transceiver revenues. So the operation different areas. The systems division, which is highly scalable, and bigger contracts, 160 million of existing contracts, 900 million new prospect pipeline, of which 110 million from existing customers. So it's fisheries, environment, navigation, safety, all that stuff. So the revenues there, blend of global government, commercial, and private customers, repeat recurring revenue, software, hardware, data services. So people sort of upgrade and get more data, all that stuff. And so that 80% of global trade relies on the seas, and we're seeing that now, aren't we? I mean, this is going to heighten, issues around this, with the Houthis there bombing in the Suez Canal, all that stuff. Global macro trend, analog to digital, driving market growth to forecast value of 350 billion. So basically, it's a huge area that needs the same kind of coverage as airlines and all that stuff and airspace. It's not. What else was I going to see here? Opportunity. There's something else. they do all this navigations receivers. Nice little sign there. And there's also AI involved in it. So you get advanced AI analytics enabled enhanced detection, identification, and characterization of targets. AR visualization enables. I was looking at this company for a while, but literally the share price just got away. But recently they've done a placing and it's dropped. I thought, oh, that's interesting. That's very interesting. They've got cash and they're expected to have upside revenue, huge growth, doubling the revenue. You know, not talking about 20%, doubling it. And then what's that? Another 50% again, pretty much. So fully integrated, digitalized operational workflow, effective, efficient response management. So that's how you do it. Yeah. But you can see the pipeline here, 380 million is within the next 2 years, and the rest of it, pretty much 1.2, is over. You know, various stage, early, medium stage. But you can see here, they're talking about the areas where they are: North America 1.3, Europe not. That's revenue generated. So the bigger revenue. Look at this. This is where Southeast Asia, and I think this was, they mentioned this a while back, but 44 million fin forecast from there. So it's quite interesting. And in fact, what's interesting actually is the 10 million they raised. 7 million was from Oceans Infinity, I think it's a company called, based in Texas and in Southampton, which is not far from me. And these are the guys to do subsea. So now they're going into subsea, and that company have been asked to look for all kinds of wrecks under the ocean. In fact, do a Google search on, I think it's Ocean Infinity, and they're quite famous. And they whenever there's like a, you know, in fact, MH170 is a plane crash. They tried to look for that. They were called in to look for that. They found lots of sort of planes or that gone into the sky, naval planes or that sort of, you know, Air Force planes, all that stuff. They found lots of different things. But anyway, global market, all that stuff, established market position, defensible, established brand, consumer. That's there. So I quite like this, and so yeah, here are the forecasts. Okay, so 47% growth. So they're expected to do 132% growth, 47 and 20%. I added that in the end. It may be bigger than that with their pipeline though. I've just put a 20% on there. And so they'll be generating, you know, pretty much 12 or what is it, EBITDA 17 million for 2025, 21 million for EBITDA. And they are literally, I mean, you can see, even if you do sort of less than 1 time sales, but you know, to next year they're profitable. And so one thing in here is that even it's good growth here, but the interims of trouble, they're 5 million in revenue. That's because they got long-term contracts landing in this half. But you imagine all this, for example, if they land these contracts, all these will improve. No doubt, all these will improve as well. So their points will go right up, and the broker target's already there. So they'll go to almost to the top of the board, score-wise, if they land those contracts, which, in fact, they have landed them. It's just getting delivery of the revenue and delivering on certain milestones. So, like I said, 160 million is backed up by contracts already signed, you know, and they've already just raised 10.5 million, I think it was.